Well, I hope everybody had a great Labor Day weekend. The market apparently did not have a very good Labor Day weekend as the news of the Trump tariffs being repealed came out right after the market closed on Friday. So as a result, everybody's kind of on pins and needles as to what would happen. As soon as the bond market opened up yesterday, you could see across the world yields were rising, and that ended up being the case today. In fact, the very familiar three-headed monster reared its ugly head again today. I'll talk about what that was, and why it matters, what the expectations are for all three of those very important intermarket relationships, what direction they're headed in right now, and how that will impact the market going forward. A few red flags that are out there. We talked about some on Friday, so I'm going to break down some red flags about why the market and why there could be. We might be kind of on the cusp of an intermediate decline right now. So we'll break that down. We'll talk about then my expectations, whether I think we'll bounce or not. And that actually leads us into our trade idea, one of the stronger sectors that we've been seeing here recently. One stock in that sector has kind of pulled down along with the market, and is showing is at an inflection point. So we'll talk about how to trade that based off of, again, the expectations of what I think the broader market will do as well. So let's go ahead and get started. Today is Tuesday, September the 2nd, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, the S&P 500 finished the day lower today by about 0.2%, flirted with closing below the moving average, ended up actually closing above not only the moving average, but where we opened on the day today. A little bit of a long lower shadow. As a result, if you can see, if you look at where we were from a short-term sentiment standpoint, I'll put our, this is, if we were closed at the lows of the day today, you can see we would have had an extremely oversold momentum line and a pretty strongly oversold near-term line. That would have been a very bearish near-term pattern. Again, something we hadn't seen for a while. We did not get that, however. As a result, the near momentum line actually rallied because of the route we move off the lows of the day. A little bit bigger than the average range, and closing at the highs of the day today also really benefited there. And the near-term line also finished in bearish territory, but not in oversold territory. So, really set ourselves up for a really good bounce coming off of this tomorrow. We had a kind of a quasi bull tag pattern, very similar to the August 1st pattern. We didn't get light pink shading, but we were slightly below the moving average there. We were 0.18%. Today, we were actually much lower. We actually finished up 0.25% above the 30-day moving average. So set up for a nice little bounce. Remember, if we don't bounce, we have that NVIDIA trade that actually did pretty well today that we did on Friday. In Friday's market outlook video, we had that NVIDIA trade that just in case we had a day like today, that's why we did it. And it worked out. We talked about NVIDIA would be, if we're going to go lower, NVIDIA would lead us lower, and it did today. But there's a very good chance the S&P rebounds and finishes filling in this gap from this morning and continues higher tomorrow. So if you take a look at the NASDAQ 100, of course, it was down a little bit more. It did get a bull tag because we did close below the moving average by 0.75%. But again, its short-term sentiment pattern on the market forecast looks very positive. The momentum line came out of the oversold levels. Now, it wasn't a bullish intermediate confirmation like it was in the S&P and on the Dow and the Russell. But still, it bounced out anyway, crossed above the near-term line. So it's setting the near-term line up for a pretty good bounce. It crossed above 40 tomorrow, if not, depending upon how bullish we are, if not 50 or 60. And that momentum line has a chance to really make a move. Again, depending on how bullish we are. We did close, again, near the highs of the day today. So a close tomorrow near the highs of the day, with a range that's above average would really do the trick from that perspective. Bull tag, again, you would expect that we'll bounce off of that until we don't, right? It's either a signal that starts us on a new path to the upside, or it starts us on a path to the downside. But it's like it's an inflection point, and that's the beauty of that signal there. And in this case, we expect that it will bounce us up until it doesn't. Because there's very few times where it doesn't, right? That's where we get the pullbacks, and there aren't very many pullbacks. As you can see, only one in the past year. We've only had one pullback. Two, if you count this quasi pullback, of like 4%, I think ended up being on the S&P there at the end of last year. The Dow Jones Industrial Average, the intermediate line still strongly in the upper reversal zone. Market sentiment lines rising in the upper reversal zone as well. The near-term lines down, out of bullish territory, but not oversold and not even in bearish territory. So technically, we're still on the same near-term rally. And then your momentum line, both the momentum and the near-term line, are pretty neutral right now. Again, long lower shadows are really good from that perspective, and we got one of those again on the Dow Jones. And your Russell 2000 again closing near the highs of the day, above the open. Same pattern, right? Both short-term sentiment lines and neutral levels. The momentum line coming out of the oversold territory. Again, the bullish intermediate confirmation signal. The near-term line in the lower half of the chart, but not bearish territory yet. So, it could still technically bounce off of this. You usually just look for it to get below at least the chart's midpoint for an opportunity for a bounce. We are still more than 3% above the moving average. So this weakness that we've had has been mostly, weakness and especially in technology and in chip stocks more than anything. And so it's been a very narrow decline as the rest of the market is actually doing pretty well and outpacing the broader market. And you see that reflective in the charts of the Dow Jones Industrial Average and the Russell 2000. All right, well, that does it for our market outlook preview video. If you want to unlock the full version of our video, you can get that link down in the description and pinned comment below to marketscholars.com. Again, it's the 30. You get access. All of our subscribers get access to the market outlook, full version of the video, starting at our foundation tier, just $29 a month or less than $1.40 per video. You get access. With that, you get access to on our foundation tier the market outlook video, the trades that come at the end. There's always one trade at the end of each video. We manage those trades every day in the market outlook live that we do at 3:30 Eastern time, and then we track the results of those trades all throughout the year with our market outlook live trade tracker. So you get access to all of that again for just $29 a month. You can kind of see we're up about $10,000. We've made roughly $10,000 over the course of this year. And it costs just $29 a month to get access to those trades and the videos, as well as the other option is you can do the full year for the market outlook, $299 a year. That's 2 months for free. So again, a great value for that. Thank you for watching. Remember, subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share the video with others. Follow me on Twitter at DavidSettle42 for more content in between the videos, as well as follow me on Facebook, LinkedIn as well. Have a great Tuesday night, everybody. We will see you all tomorrow.